Okay, we're recording. All right, so trading psychology. Let's start with the basic stuff, okay? The basics of trading psychology. Now, before I get into anything, there was a study done by IG Markets. I'm sure everyone's heard of IG Markets. They're one of the biggest brokers that had most traders just waited, literally waited. There are a lot more successful traders in this world. Now, they say there's only about 95% of traders actually become successful. And mostly due to psychological reasons. Yeah. It's not a trading strategy that's stopping most people from becoming successful. It's usually themselves stopping themselves from becoming successful. And what I mean by that is, right, let's say you have a strategy. Let's take my trading strategy, for instance. My strategy works great in trending markets, right? When the markets are trending, it's an absolute killer of a strategy. What I mean by that is here. My trading strategy kills in these points here. Absolutely beautiful. It's hard to lose. But when we go into consolidation, it's horrible. Does not work at all, right? So for me as a trader, I've got to sort of differentiate myself from when to trade and when not to trade. I trade in these peaks here. I go on holiday in these peaks here, right? I take the time off. When we get those trending peaks again, I start working again. I start trading again. However, if I was to try and use my trading strategy in this peak here, let me just box this all up here. In this area here, it's not going to work. So I know the only time that I can make money as a trader, for me, in this area here. That's the first thing I have to understand with my style of trading and my trading in general. Now, if I trade this part, right, over the last few months, and I make a killing, and then for the next month, the market goes into this cycle here, and it just goes absolute dead. And one, I think my strategy is broken. I think that I'm a crappy trader. You know, nothing's working. Nothing I do is working. And then that causes me to go into this cycle where I try and find a new strategy. Lots of traders do this. They'll find a trading strategy, right? They'll test it out, right? They'll take a few winners and losses. They figure out, you know, over the last 5 trades, I'm still at kind of break even. They'll try and find another strategy. And you just keep going around in this circle, right? But the only way to get a consistency trading strategy is to just find a strategy. You might have a down day, keep with it, right? Keep with it. And eventually you work your way up. Of course, right? There's going to be down times, then there's going to be up times. My down times as a trader is this area here. I don't trade it. Not in the higher time frame anyway. I might go to the 1 hour, for instance, as you can see, I'm lining this up here, and I'm waiting. Right? I'm just waiting for a nice little 50% pullback, look for a potential entry back to the 161 extension. Bit of day trade to the upside, right? So the first thing I have to do to keep my trading psychology in check is understand my trading strategy. Not enough people do that, right? Everyone sort of just jumps from strategy to strategy. They're like, okay, sweet. I want to be a trend trader, day trading, right? And then there's no trades that day. So like, oh, you know what? Screw trend trading. I want to be a swing trader, counter trend trader, you know, and then they're always chopping and changing where they're never getting enough time to just see one trade strategy all the way through, right? Every strategy is going to have its ups and downs, and something you have to come to the grasp with when you want to become a successful trader, right? These little downtimes are unavoidable. But also, these up times are unavoidable as well, right? So what I mean by that is when you look at an equity curve, it's never just like that. Equity curves are like this, right? It's a steady and slow gain to the upside. And all these little down points, they're just little drawdowns or whatever, you know? But eventually, you make your way up. So even though these little drawdown points are unavoidable, so are these high points, they're unavoidable as well, provided you stick to one strategy. Right? And talking about strategy, how do you know when you have the right strategy? There's another thing a lot of traders struggle with. They're trying to find a trading strategy that has 90% win rate with a 1 to 10 risk reward ratio. I tell you, it's impossible. My win rate, probably around 50%, 55%, with a bare minimum 1 to 2, 1 to 3, 1 to 4 risk reward ratio. Most traders are chasing that real low risk, high return strategy. And trust me, I've been chasing that for 14 years. Doesn't exist. Yeah, something I always tell people is if there was that strategy out there that was gaining those big returns on a monthly or weekly basis, there'd literally be no national debt in the world. They'll just be trading. They'll be using that one trading strategy and just go, yeah, let's just do this. You know, someone would have found it by now over the last 100 years. Doesn't exist though. So you got to understand, before you become a full-time trader and want to make a living out of trading, you got to understand the very basics of how your trading is going to work. And that's that sometimes you're going to have these down days, right? Where your equity curve is down. There's other times they're going to be up and then down and then up. You can't let these little down times ruin these potential big up days. Yeah. Now, so I keep forgetting, what was the other part? Why traders, and that's mostly why traders fail. They're just always chopping and changing, right? My strategy, if I lose the next 3 trades in a row or 4 trades in a row, I'm going to continue to execute trades the exact same way, right? Nice 50% pullback, push to the 161. Just looking for that trend continuation trading. That's all I do. Literally just looking for trend continuation. In this area here, it gets there. In this area here, I'm just literally just buying the dips on the trends. Obviously not every single one, but just looking to buy those dips and just ride that trend out. And when you do that, you're going to feel invincible. You're going to feel absolutely amazing. But then you go into this peak and trend trading doesn't work. And then you feel like it's broken. It's never going to work again. You need to change strategies. You need to do something else. And then you change strategies and you start trading another system and try to learn another system. So when the market starts to trend again, or this is just my example anyway, not everyone's a trend trader, but when the market starts to trend again, you miss out on the trend because now you're trading another system instead of just being patient and waiting it out. So that's the first part. Trading for a living though, much harder. Everybody wants to trade for a living, but no one takes in the simple aspects of what it means to be a trader for a full-time income. Now, I've been full-time trading for the last 6 years. I went full-time 6 years ago. I do have other businesses as well, but generally I've got people that run that for me. Got a couple shops here and there. People run for me. I'm not hands-on with it. But when trading was my only and full-time income, right? It's not easy. It is not an easy thing to do. It's possible, and I made it possible, but it's hard. A lot of people seem to think that they're going to become full-time with, say, 50 grand capital. It's not going to work. 10 grand capital, not going to work. 25 grand capital, not going to work. Because you have to take in a few simple facts here. Most traders, professional traders is what I'm talking about, anywhere between the 30 to 50% gain per year, right? Traders trying to get higher than that usually fail. The traders that are trying to get 100%, 200%, 300% usually are the ones that are failing. It's not me saying that. This is like all study-based. This is like statistic-based on brokers, right? They've come out and they've got all the data. They've done all the research and they say this is what most professionals try to aim for, this area here. Retail traders, that is. Institutions a bit lower. Retail traders, that's what they're aiming for. Professionals. I'm anywhere between this. I'm 30 to 50% and anywhere between, right? Depends on the year. Depends on how the markets trended that year. And that's enough for me to live full time without any other income, right? And where most people fail, like I said, is they try and start with a 20 grand capital full time, and they're trying to get, 50% a month, 100% a month, that sort of stuff. But the problem is, right? Here's where the problem lies: is if you've only got 25 grand or even 50 grand, right, in capital, what happens during the time where you don't make any money that month? You're actually in a draw, you're in a loss. You've got to start drawing from that 50 grand, so your capital diminishes. So let's say your expenses each month are, let's say you live very cheap. Your expenses are 3 grand a month, right? What happens if you have 2 months in a row that are down, and you're down, I don't know, 1% each month, right? There's already money going out of your capital, and now you have to draw a wage out of your capital. So your 50 or 25 or 10 grand starts to diminish. Now you have less capital to trade with, right? But traders don't put that into aspect. They sort of think that, no, every month's going to be profitable. It's not like that. So the way I do it is I have an offset of X amount of dollars. So each month, I'm not going to say how much. I don't want you guys to know my income or what I do. But each month, I put away three months worth of wage in a separate account. So let's just, for instance, just say it's $3,000, right? Let's say I'm very cheap and I live on $1,000 a month. I'll put 3 months wage away. Now I don't have to touch my trading account. Let's say my trading account's only, I'm not going to give you the real figure, but let's say my trading account's only 10 grand. Now for 3 months, I don't have to draw out of this 10 grand. Okay. I only have to draw out of this 3 grand here. So 3 months time, I expect that I'm going to make at least 14 or 13 or whatever, right? Obviously it's not on the dot, but, and then I'm going to be able to take that out of my capital and put it there while my capital slowly grows a little bit. So let's say I live on that each month. Let's say my capital is this, right? This dries up, January, February, March, it dries up. Hopefully by then I've made about 14, right? So then I take 3, I put it back in there, and now my capital is 11, okay? 3 months later, do the same thing again. My capital is now 12, right? But I've always got that little buffer that's grown my account. That's how you really got to do it. But on top of that, you got to take out tax each year. Now I've asked Nick if I could actually do a video about this, but due to, I think, like laws and that sort of stuff, because I'm not a tax accountant, I can't give too much information, just like purely because of laws, but you have to take into account of tax. I don't know what it is for each country, but for my country, it's 30%. So each year, I've got to look at the profit made, and I've got to pay 30% tax on that. Unless you have a really good accountant who can bring it down. So I've got an accountant who brings it down to about 22%, which is better than 30%. So, you got to take that stuff into consideration as well. So, a lot of people don't put this stuff into concept when trying to trade full time. They sit there and just think, just money, just money, just money. They don't take into consideration, what's my wage, what's my living expenses, what do I do if I don't make money for the next month or two? Because trust me, it's going to happen. It's not that it might happen, it will happen. What happens if I don't do this, right? So trading itself can be extremely hard. It can be extremely possible. And I did make it possible for a while, but it can be extremely hard. And you have to take this stuff into consideration. So if you do go full time, it's always a good idea to have another income. And that other income can be whatever it is. It could be an online income. It could be Uber driving. It could be whatever it wants. Right? I actually thought about years ago so right now I've got a couple retail stores. And before I set those up, I was trading full time and I was just bored. I had so much spare time throughout the day. I was bored. I'm like, what do I do? Trade my own income. Surely I could do other stuff. And I thought about, why not Uber drive? I never did it because I couldn't be bothered. But there's lots of little things you can do there, even just to kill your time and drive full time and then make another spare side income. Because when you become a trader, when you do it full time, it's going to be hard, not just for the income reasons, but psychological reasons, keeping yourself busy throughout the day. Right? So now when I first went full time, I had a really bad routine because when I was working full time, I had this great routine. I was up at 4 a.m. I used to go to work. I was at work by 6 a.m. I'd be finished by 2 p.m., 3 p.m., and I'd be at the gym and I'd be home by like 6 p.m. And then I'd trade and then go to bed. That was my routine. It was the exact same. I was set in this routine. When I quit work to trade full time, my routine all fell out of whack. I wasn't waking up till like 8 a.m. I was like, sweet, don't have to wake up. I wasn't waking up to 8 a.m. Stopped going to the gym because I got too lazy. Just stopped doing all this other stuff. I was just basically going out every day, just going to get, I don't want to say it, but, get drunk and eat some good food. And that's it. That was my routine. And you have to really break yourself from that. That's the psychological part of trading is you got to break yourself from the routine part, the bad routine. And you got to, give yourself healthy habits, healthy income, and all this sort of stuff. So when you put all that sort of stuff together, there's actually a lot of pressure on being a successful trader, right? And being a successful trader isn't just, I'll make 2% a week, just 2% a week, 1% a week. It's not going to work like that. I've never met a trader that's consistently pulling income each month. Right? For me, I certainly do not pull income each month. I have about 2 or 3 months throughout the year that are down and negative, and the rest are positive. So through those negative months, I've got to make sure the positive months are and outweighing the negative. And when I say negative, they're only there might be a 1% loss or 0.5% of a loss. Nothing huge, right? But the winners are anything between 1 to 5% winners, right? And if I get a consistent 3% a month, I'm happy, right? That's enough to pay my income, pay my tax, pay my living expenses, pay everything, and still have enough in my account to continue to grow it. So I try and aim for minimum 3% a month, but it doesn't always happen. Sometimes it might be 2.2, right? So trading is very much like owning a business and owning a company where you've got to sort of really be disciplined in that sort of a retrospect and go, okay, cool. Let's say 1 month you have a big month. You make 3 times your initial profit you're aiming for. You make 3 times that. Now you got to stop yourself from going, I'm going to withdraw that and I'm going to go party or do something really good with it. You've got to sit there and go, okay, cool. That extra 3 times income, I'm going to leave it there. And that's going to be an extra bonus for when, not if, but when I do go through that drawdown period. That's going to start to carry me, right? Because this is, an extra, let's just say an extra $5,000 profit that I made this month. Now that's going to be my $5,000 profit that carries me through the drawdown. So next month, if I do have a drawdown, well, cool, I've got that extra $5,000 buffer, right? So there's so much that goes into being a trader. And I always say this, and for any members that are A1 members, or if you're not an A1 member, and if you do sign up, when you sign up, or if you've signed up, go check the resources tab, because I've put in there a business plan which outlines how to really make trading a full-time income, like what you should do, how to put it all together to become this full-time income, all the key things that I did to stay consistently on the right track as a profit trader. Right? So that's, really coming down to trading psychology. I keep having to check the Zoom thing. I keep forgetting what I'm talking about. Trading psychology, why traders fail, and how to trade for a living. Right? Trading psychology, like I said before, is a strategy hopping. Right? And like I said, just to touch on it is, IG markets. They did that big research thing where they said that if more traders just took their trades and left them, there'd be a lot more successful traders in this world. But too many traders, they'll take a trade. Let's say you buy here, stop loss here, and then they'll go, watch it. I have to watch it. I have to see what's happening. If it starts to go down a little bit, no, cut the trade. And then finally it comes up. You're like, I should have kept the trade open. How many times have you guys done that? I'm sure there's been a lot of times where you guys have done that. I certainly used to do it. And that's the part you have to break, right? Because something I always say is, if you set your stop loss here, you enter here, and you take profit here, you have to have set that for a reason, and you cannot close your trade early if it starts to pull back on you. You have to let your trade hit your stop loss or your take profit. It is the only way you can play out the probabilities of your trading system. If you cannot do that, then you cannot become a full-time trader. You will not become a full-time trader if you consistently mess with your trades. And it's always the set and forget mindset that I always say. In the webinars, I tell everyone, take your trade, close the chart, don't check it until next month. Just do not check it until next month. And if you're having trouble letting the trade go, you're having trouble sitting there going, you know, I need to check the trade, then you're not comfortable with your strategy and you're not comfortable with your risk. So what I tell people then is, don't be afraid to go back to demo, get comfortable with the strategy, trust it over the next 3 months, then come back and trade live and lower your risk, right? There's no point in trying to make money trading when you don't know how to make the money trading yet, right? You have to learn how to make it and then you make it, right? So that's a big reason why traders fail. Are those few reasons, you know, those few things that I just touched on. And I didn't put a presentation together. I was going to put a whole PowerPoint presentation together, but you know, I've always found just myself personally, I've never been able to, if someone's doing a PowerPoint presentation, I get bored. I'm like, I don't want to focus on this. I like to sort of, you know, do this sort of stuff. Guyong, hopefully I said that right. Hi, welcome. That's okay. I am recording it. So I think Julie will put it up on their YouTube or something. She'll put it up somewhere later. But welcome, nevertheless. Any questions, by the way, while we're on it, just feel free to shoot the questions out. Anyone wondering? And we'll go look at some markets as well, right? But those few things, hopefully you guys took some value out of that. And I really want to touch on those. Because that was the point of this webinar. It was, you know, why traders fail, which we touched on at the beginning and towards the end, how to trade for a living, and all that sort of stuff. Guyon, you thought euro dollar was going lower. We'll check it out. Right. I don't think there's much on dollar yen for me, but we'll go check out dollar, euro dollar. We'll go check it out. I'm watching these few trades here. We'll touch on these few trades that I'm watching and why I'm looking at them. But again, feel free to just ask some questions. We're going to go look at some charts, and I'm going to show you guys how I trade. Right? The stuff that we get in the webinars all the time, every day, 5 webinars a week. So first off, Euro New Zealand, right? I'm a fan. So well, actually, before I get into it, is what you guys should know is I'm a trend trader. I trade strictly and only with the trends. When the market's like this, I love it, right? When it's like this, I hate it, right? My money is made in these trends, right? When we get these nice little trends, push up. My money is not made when we go into consolidation. So when we go into that stage, I'm not trading. So right now, Euro New Zealand, I am liking this one. And I actually took a small day trade on this last night before I went to bed. I sold it here, stops there, and my take profit was down at this area here. So I can't see because I'm only using the one screen at the moment. I've got this big zoom thing in the way. My take profit was down there at that little support. So hit take profit this morning. It was for a quick 65. Well, it wasn't a scalp, it was a day trade. Quick little few pips there. And that was just before I went to bed. So my style of trading is very much trend trading. Right now, I'm looking for a setup on the Euro New Zealand. I'm looking for a pullback in the direction of these EMAs. I only trade in the direction of the moving averages. So when you look at the direction of them, you got the 200, the 50, and the 20 moving average. This is what I use religiously in my trading. We're below the 200, the 50, 20, I'm selling, right? And now I just need to find an area to sell in. A smart area to sell would be the pullback to this resistance, right? That would be a nice pullback, and that gives enough room to move back to the downside. On the 1 hour chart, it's that, you know, very clear level here is where I'm looking to sell this market. So right now on Euro New Zealand, the market's going to roll over here in about 7 o'clock my time, 7 a.m. It's 5:30 now. I'm going to wait till 7 a.m. because I anticipate the Asia session is going to push up into here before we get the London, New York push back down. So I'm definitely looking to sell there. right? That's my first trade I'm looking for this today here in New Zealand. Second one is pound New Zealand. Looking for pound New Zealand to push up into this resistance here. All right, come back and retest that area there before we get the next push down in here. And that's a pretty extreme pullback, but I'm confident in it. What I do like about this one, very much like most of the pound pairs, is, we're starting to get that big bearish momentum. So a nice little day trade would be pulling back into here, looking at selling it at 1.94360. Right? Very briefly. Aussie CAD, right? Aussie CAD has broken this high here after this nice triple bottom, right? Broken the high, looking for a pullback, look for a take profit up in here. Nice little day trade to the upside. I'm gonna ask. I can't do it. I'm trying to take. So people keep having to. I keep having to admit people in the room, and I can't for some reason take off the enable waiting room. So anyway, yeah. So that's what I'm looking for on Aussie CAD, and my strategy is very simple. I'm not boasting. It's not perfect, but it's not the worst. It's just either break retest or just selling the rallies in the downtrend, buying the dips on the uptrend. It's as simple as that, and it works. So Aussie CAD, that's someone I'm looking for. Is that CAD Swiss rank? Basically good for a break and retest, right? So if I start on the daily chart, I go, cool, we're still in a nice uptrend considering this little bit of a pullback into support here. I've got to start looking for an opportunity to go long. Well, I want to break and retest of there and then start looking to go long. Yeah, 1 hour chart. Right. This will probably push around for a little bit. Eventually, I'm looking for that break retest. Push back up into here. I think it's a pretty decent trade. Right. That's CAD Swiss. I'm just going to touch on them briefly. I don't like that one at the moment. Aussie Dollar. Loving the Aussie Dollar. Right. So we've finally broken out. I've been waiting and anticipating this to break higher for a little while now. We finally held, we finally broke out. Provided the data candle stays above here and closes above here, I am looking for a pullback of 50% from the actual breakout zone, which is also the support level here. Pull back 50% for that next push higher, for that push back up into the 161 extension at 77.7 on the dot. So that's someone I'm anticipating on the Aussie dollar. And pound Oz, I definitely like this lower, right? So we've finally broken out from this nice big flag, big bearish engulfer. So the way I'm trading this one is I'm anticipating a 50% pullback of the actual daily engulfer. So we have the daily candle here that broke out from here, and I'm looking for a pullback of 50%, which is right about there. And we go to the 4 hour, right, which lines up, if we just mark that out, lines up with that resistance, which is perfect. We'll keep that for visual reasons. It lines up with that resistance area here, all through there, through there, through there. So that 50% lines up with 50% Fibonacci. It lines up with the resistance. I like this higher. Sorry, lower. And my targets for day trading, targets will be down at 161 extension, which lines up with the support. Swing trade be down at 261, right? Which also lines up with this nice support. But the general rule of thumb with breakouts is, or these patterns in general, is they usually make it to the end of the pattern. So down at the 261 would be pretty ideal, which is probably where I'll be aiming for. Down the 261 extension. Nice swing to the downside. Any questions, by the way? Just feel free to shoot them out. Euro dollar, we'll go Euro dollar for you. Euro is weak and dollar is strong, I thought. Well, could be, I don't know. We'll look. One. See, I don't generally, what do I mean? I don't generally, dollar. I don't generally look at strength meters for Euro for that sort of stuff. I usually just go based on price action. What's moving, what's not moving. It could come lower from this level here, but right now on euro dollar, there's really not much there for me. Really, really not much happening. I did take a short on dollar Swiss franc. Just I was bored last night and decided to sell on the retest of only a very small trade, like literally 0.10% of my account on this trade. It's just a day trade. It was basically following this trend, pull back into resistance. I decided to sell it just for a quick 70 pips to the downside, 4 hour under that 200 EMA, retest that support. Still was good. I still like it. I'm still confident in it. Remember, the trade's not wrong until the stop loss is hit. Nice rejection there on the 4 hour. I was happy about this one. I'm still happy about it. I still hold it I'm still gonna hold it. I don't close the trade unless I just take profit, stop loss. So yeah, so they're the few trades that I'm looking at and the few trades I'm in. So let me just get this back up. So yeah, dollar yen, euro dollar. I'd anticipate two things happening here. First off, I'd anticipate break and retest eventually. I think this will head higher based on price action, right? You're getting this little inverse head and shoulders here. So we'll have to see what happens there. Otherwise, if this resistance does hold, you could get that push to the downside. But right now, euro dollar, there's really not much there for me. Hasn't been much there for me for a while now. I just haven't been trading it. I am long on this index, the FTSE, and this is more of a long-term trade. So I bought this one, and I don't even have to take profit set. I'm just buying it and just going to let it go forever. You can see the all-time highs are up at this level here. So where my stop loss is there, this one, if you look at the whole effect of the COVID, this is my theory behind this trade is this big effect of COVID, right? Most markets have pretty well recovered at this stage. Let's go, I'll show you what I mean. Look at the US 500, right? After the COVID drop, right? It recovered very quickly and went on this massive uptrend, right? Where the UK 100 at the moment is the FTSE, right? It still hasn't fully recovered from this COVID drop. Right? It's pushed up, but it's starting to get that trend to the upside, yeah? Where it is now, at this stage, is about, to me, where this stage on the US 500 was last year, June last year. Right? So you've had the big drop, you've had the push up, the first higher low here, second higher low before the trend really continues up. You look at the UK 100, at the big drop, second higher low, the third higher low before the trend hopefully continues right up. And I will hold through the whole time highs, right? This is a trade that I'm looking to hold rest of the year or even longer. So we'll see how we go with this one. The beautiful thing about indexes, right? You can just buy them and you hold them. And they're just like something that ticks you off in the background. And you 2 years time or, 5 months time or however long, you might go, I might close it now, take a nice chunk of profit, or you just continue to hold it forever. Indexes are probably the safest and easiest way to invest. You just buy and hold it. And you buy it strategically, not just randomly. You just buy and hold it. Right? If you were to buy and hold the S&P back in 2016, wherever, you just held it. You give them one massive trade, right? And that's what I'm looking to do with these indexes. Last time I had a ring long-term trade on the index, it's been a long time. It was back over here in 2017 before I got taken out over here somewhere. So I can't remember exactly where I bought it, probably around here somewhere, and it's just trend. Anyway, trying to stop loss eventually got taken out. I held it for pretty well almost a year. Any questions? How did everyone find the webinar? Like, did you guys find the beginning part pretty well informative? Feedback's always great. We thrive on feedback. We need to know what you guys like, what you guys want in the future. If you didn't like something, you wanted more. Or you can just ignore. Cool. All right. Well, pretty much talked about what I can talk about for now. If there's no more questions, I think we'll start to call it. It's been about 40 minutes. No more questions. We'll call it. Cool. All right then, guys. Appreciate you joining the webinar. Hopefully we've got plenty more free webinars coming up for you guys. Webinars are really great and very informative. Please conduct more webinars. We definitely will be. Look, I host webinars at A1 Trading. A1 Trading is the only place. I actually do get asked a lot, how can people view my webinars? And I always tell them, A1 Trading is the only place that I do webinars. I don't offer my own education services, only at A1. So I do get asked quite a lot. So feel free to hit up Julie or the A1 Trading team, whatever, anyone there, and just get more information. Or you can direct message me as well, get more information. Apart from that, guys, love to see you in the future webinars. Take care, and we'll see you then. Cheers, guys.